All right. Hello, everyone. Welcome to another live trading session. Today is Tuesday, 27th February, 2024, and we're getting ready to put on another trade. But before we do that, I want to talk about a little something, basically PDS, evolution of a PDS, I call it. I've been thinking about this lately, and I just wanted to kind of do some thinking around the PDSs that we put on. So as you know, probably by now, generally speaking, what we do is we do a naked put, whether it's one ES put or several MES puts. And then after that, we go and we spend up to 20% on our PDS. PDS. And we generally look in the area of 35 delta as a default, and we look at 75 wide as a default as well. And this is just a default. It's not a hard and fast rule. It's just something to get us started. But as I've been thinking about this, I want to point out that basically, what is the purpose of the PDS? What's the main purpose? The main purpose is to give us a little bit of a cushion when we go down on our naked puts. When we're challenged on the naked puts, we want a little bit of cushion so this equity line doesn't go like this, but it maybe goes like this. And basically, the PDSs amortize our movements both up or down because there is some cost involved in them. So when the ride is smooth, when our naked puts are getting closed with no losses, our returns are not as high. They're a little bit down, but the same goes when it goes down, we're not as down. So we basically amortize. Instead of going like this, we go like this. That's the idea. So given that, I'm thinking that it shouldn't be necessarily that we look into only 20% cost. We should actually look at the protection we get, because it's not the same if we sell $1,000 worth of naked puts premium or we sell 1,500. Because if you remember this, whatever we sell, we are at 200% stop loss. So we're looking here to lose $2,000 on a book wipe on a stop loss, and here we're looking at 3,000, two times this. This is, of course, if we can get out in time and all that good stuff, regardless of the slippage and things like that. But generally speaking, we're just looking at this at the moment. So if this was one ES put here and this was one ES put here, and I'm thinking about this specifically because we actually moved from 8 to 9 delta somewhere to a neighborhood of 11 delta, call it 10 to 12, whatever it may be. So given that, our premium is going up, so that makes me think that we need more protection not protection, but more amortization in the movements to prevent higher losses here. So I wanted to look at the width of the PDS, and also I like the rules of thumbs because they're easy to remember and usually get us close enough. So I'm thinking that if you sell a naked put, say for $1,000, then we want to spend up to that doesn't change. We want to spend up to 20% on our PDS or PDSs, and then the width. And if we stay close to around 20%, and I'll show you what I mean by that, around 20%, then we can move the delta slightly. Maybe we need to drop down a little bit to get a little bit wider protection. It doesn't really matter. We're in the ballpark. Depending on the market movements and the premium we collect. So in the higher IV environment, we'll collect more for the same delta. We also need to increase the width of the put debit spreads to follow the put debit spreads. So in this particular case, say for $1,000 that we collected on naked puts, if we want to collect 20% in MES, remember the multiplier 5 will basically get us to $1,000 coverage. But if you take 20%, that's 200 roughly. So that could be 3 times 75. That'll get us a little bit over, a little bit 200 and change, or 2 times 100. That'll be also acceptable. anywhere in that neighborhood. And then we want to make sure that we don't spend more than 20% to get there. So if this changes and we collect 1,500 here, now we're looking to collect 300 in width. So it could be 3 times 100, or it could be maybe four times 75. And everything else stays the same. We want to spend 20%. So maybe we need to adjust the delta up or down to fit that. But this way, the amount of premium sold, which is also our risk that we are exposed to per naked put or naked puts, stays the ratio between the protection and the premium collected, or the risk stays around the same, and keeping it at 20%. So basically, if you multiply this 300 by 5, you will get to 1,500. So it's about equal amount in total protection as it is for the initial collection of the naked put. Obviously, we're not gonna collect the full width. We are looking at maybe collecting 80% roughly, give or take. But we will have more than one put debit spread per naked put, because we are taking naked puts off at 60% profit, and then we are keeping put debit spreads for longer, so they should pile up and provide a little bit more. But let's see what that looks like in practice. So let me remove this, and let's now. Any questions on this, by the way? Okay, not. So I already put these numbers here with 65, 693. So we're moving nicely in the right direction. Everything is fine. Our buying power is very low, as you can see, at 10%. Delta theta, all is in line. So we're fine to put on our trade today. And just a reminder here, if you take a look at the naked, the weekly target premium, it's right here. And then the daily target premium. This can be a guideline to you in case you want to have a particular schedule. Say you want to be doing 1 trade per week. You can take a look at this and see if you can hit roughly this amount. That will keep you on a schedule for once per week. And you can do MESs, several MESs to get there, or maybe sometimes a single ES, depending on your account size. Then if you want to do something like every other day, if you want to do a trade every other day, maybe you can do twice this amount. So you're looking for 500. So maybe you would sell just a couple of MESs. It doesn't matter. This is just, remember that this is a little guideline. So knowing this, let's take a look what the market is giving us at the moment. So we are in ES. So let's just take a look what would be in ES, but we're going to go to MES because we're going to do a little bit more often than once per week. But let's just see where we at in ES. So we would go to 94 in this case, and we would go somewhere in this neighborhood at 11, 12 delta. And this is right here. So if we do this, we could have a trade once per week. This would be perfectly fine. But this week, I'm going to stick to MES. And again, I know I pay a little bit more in commissions, but I just want to make a couple of trades this week as opposed to one trade. And in this case, we're going to go to 80 days because 114 is just a little bit too far out. And let's see if we go right here, 47. And then if we do 5 of these, for example, we would get around 550 plus. So that's about half the premium, a little bit less than half what we wanted. But let's see if that's fine. We can go to 12, but let me just see. Dan says I use SPX with portfolio margin. In your plan, you say to use SPY or XPS. Is that correct? Yeah, Dan, that's correct. If you're using portfolio margin and SPX, then you definitely want to do SPY or XSP because that will use the same margin. You don't want to be combining span margin with the portfolio margin because you wouldn't get the benefit of why not use SPX? You can if your account is large enough. So remember, if you're doing, are you asking if you want to do your PDSs in SPX as well? Because Is that what you're asking, Dan? Correct, the PDS. Yeah, you can do that if your account is large enough that you can put on several SPXs as a single trade, but you would need a pretty large account for that because remember the ratio PDS to SP to naked puts, it's roughly 1 to 5, as we want to use only 20% of our naked puts premium on PDSs. So if you can, if your account is large enough for you to be able to sell, I don't know, 3, 4, 5 naked puts in SPX, then you would be able to use the PDS in SPX as well. Does that help? I hope so. Yeah. Okay. Thanks. So here, so we're looking at. Let me see. Yeah, let's just stay right here. Do 5. Or maybe let's see, maybe we can even do 6. Let's see, what would that 680 that might now let's just stick with 5, right? Okay, let's see if we can collect this. Let's be a little bit greedy and see if we can. Very unlikely, but let's just try. Now, of course, let's go here. Let's replace this one. Go down. We're going to have to go a little bit further down, it looks like. Place. So probably that this is going to close. So 560. So if we, okay, let's do this. 560. So if you remember, we said, so 560, 20% of that would be $120 roughly. So we want to do either 125 or let's see what the market is giving us here. If we go to around 31 delta, let's see if we can find something here that's not already filled with. Let's go here. That's 31 delta. We're getting we're spending $100, and we said we can spend up to 120 to get. You know what? I think the easiest solution here will be to do just one of these. So if we can close something like this, we are spending around 20% of the premium collected, and we're getting the width at 125, which is again around 20%. So let's just up this. No, let's just try. We have time. Yeah, it's okay. Perfect. So we close that one, and now let's go and put that in. First of all, the naked put, it's going to be 48. We did MES, and of course I have to check right here just real quick. This was 4,700. 4,700, I think it was 80 days. And we got, what did we get? 2250. 2250, and we did 5 of them. So that's on that 563, and then the PDSs we got let's call it 49, and this is MES as well. Today's this and 5,000, and then 4975 is it? Yeah, 40, and it was 80 days as well, and we paid. Let's just we paid 24 minus 24, and we did one of those. Okay, so as you can see here, we got 125. We spent 120 in total. So that's all roughly in line with the. Remember, this doesn't have to be exact. This is just a rough guideline to keep us on track of spending the up to 20% of premium collected, and then getting about 20% of coverage, which when multiplied by 5 will give us about roughly even amount of the collected premium. All right, so I think that's all for this. And if you find this video useful, make sure you like and subscribe. And if you want to join us our Discord, the link is in the description below. I will see you all on next, let me see, I will see you on, well, looks like Thursday or Friday, maybe. It says Thursday, but I'm not sure if I'll make it on Thursday in time. If I can, I'll let you know in the Discord, otherwise Friday. Everyone have a fantastic rest of the day. Thank you. See you Friday or Thursday.